What's going on, everybody? I'll be back with another video. I hope you guys had a good week, and let's go into some AMC technicals. Alright, so we've got AMC pulled up on Thinkorswim, and if you guys saw my video last week, you saw that we were in a range from $41.35 up to $59.53. And the video that I made last week was on Sunday night, and I told you guys that I wanted to see AMC move to the upside and test that $59 level and hopefully break that level and stay above that. Now, this week was still a good week because we tested that $59 level and we broke that 3 times. You can see that I denoted that here. We broke that once, went up to about $62. We broke it again on Thursday around power hour, and then we broke that again on Friday morning. Now, what we need the stock to do is to break above that level and stay above that resistance to create a new support. Once we do that and we create a new support, then we can see AMC moving up to that $68 level. Once you see that breaking above that and staying above that, we can see that it will, hopefully the RSI will start to cool down, and that will allow us to make a new leg up to that $68 level and hopefully stay around that channel from $59 to $68. And then once we stay around that level and that the MACD starts to cool down, because we can see that we are starting to get into a sell-off period, then we can hopefully break that $68 level and move up to the next hopefully channel of that $68 range to $56.97, which is that all-time high. Now, I know there's a lot of traders out there who want this trade to move to the upside really quickly. However, we can start seeing that AMC is doing exactly what we wanted to do and start stair-stepping higher and higher. Now, that new channel support of $41.35, it hasn't tested that for a couple days now, so I don't think that that is going to be a support that we are going to be seeing anymore. If anything, I believe that if we were to dip down, let's say Monday morning, then we would be dipping down to $51.77, but we will not be dipping down to $41.35. And if we did, then I think that it's going to be a good buying opportunity, and we would probably bounce back to that $51 to $59 range quicker than we did the previous, which was back over in this area. Alright, now that we've got the technicals figured out, I wanted to also talk about AMC in terms of why yesterday was an important day, and that was because it was quad witching day, and a lot of investors thought that AMC was going to increase rapidly because of this. So if you don't know what quad witching day, this is the event in which index futures and options, as well as single futures and single options, all expire within the same day. Now what this could lead to is when all of these are in the money, they can rapidly shoot the stock up, or if they're not, then they could rapidly shoot the price down. However, since we didn't see a huge movement to the upside or the downside, then to me, I believe that this was a successful day because we did close around that $59 level. Now, it's good to note that as a retail investor, it's not going to always go the way that you hope to go that quickly. You know, we all know that AMC is going to squeeze at one point or another. However, it's going to be a bumpy road from here on out until we get to that short squeeze that's going to happen. Now, the reason for this is because there's a lot of manipulation in the stock from hedge funds. Now, there's a talk that Kevin Griffin talked about a while back, and I actually got this information from Review Dork, but it was really good to know, and I wanted to bring that up again, that these hedge funds use AI systems so that they can manipulate a stock to create fear. Now, as a retail investor, fear is going to dictate how we hold or sell a position. If there's a lot of fear, then we are going to sell a position prematurely because we don't know if this stock is going to continue to go up. However, if we don't have any fear, then we can continue to ride that wave. Now, that fear is going to be different for everyone, but you're going to have to let go of that and know that this stock is going to be highly manipulated because these hedge funds have a lot to lose in the long run. And if the stock continues to go up, then they are going to be losing even more and more money. So as an individual retail trader, we have nothing to lose by just holding on to this stock. But if you are shorting this, like a lot of these hedge funds are, then they have a lot to lose because every single day there's interest being added on to their short positions. So I wanted to tell you exactly what I heard when I saw that video from Kevin Griffin, and he said Dynamics of human behavior can be taken advantage of by technology. If market makers know how humans behave and can predict that, then they can take advantage of that behavior by using AI technology to better position their portfolio. So just know that information and keep that in mind when you see that the stock is going from $64 down to $57 and back up to $64 on a day-to-day basis. They want you to have that fear, because when it hits that $64, you think that you're on top of the world and you are buying more and more and more. However, when you are at $57 and you start seeing that you are down some percentage, if maybe you bought your first position at $64, then you're going to think that you know nothing about the stock market. However, this is all done because they know that retail investors are fearful. So just, in my opinion, if to limit the amount of fear that we're going to have, we have to invest as much money that we are willing to lose, because then at that point, then we have no fear of losing that money and all that is gone, so you can continue to hold on to that stock regardless of if the price goes up or down. With that said, I hope you guys get a lot of video out of this. Please click that like button and subscribe, and I'll see you guys in the next video. Peace.